Hello. This is be a long ass video, a really long ass video. I'm basically gonna go through all my 3 years of experience from day trading, from the very beginner shit to all the advanced shit, how to go broke to making somewhat decent money, and yeah. Um, Before I start, let me make a doc. All the stuff we're gonna go over. Okay, so we're gonna first go over all the. Okay, let's go with websites and software that we're gonna be using. We're gonna be doing basic charting, then do our trading strategy, then psychology, trading strategy, psychology, and prop firms, and how to scale your Benjamins. Okay, so first, websites that we'll be using and software. Okay, first we're obviously going to use TradingView for our basic charting stuff. But before we do that, let's do like the less important stuff. Okay, so first, Forex Factory. Go just search a Forex Factory on Google, just forexfactory.com. Make an account if you want. If you don't, it doesn't really matter. You still get the full access, okay? You'll want to go to calendar, which is up here, okay? This is not what it will look like here. Remove filter. This is what you will see. Lots of bullshit, okay? You see all these folders, right? These are all news and stuff like that. But as you can see, we have yellow, red, orange, and gray, right? Those are just like how much of an impact they are to the market, okay? And also, as you can see, these are different currencies. We have the yen, the Aussie, the pound, and USD and stuff like that. But since we're doing futures, we're only going to be focused on USD. So how do we filter these so it's easier to see visually? So up here at the top right, we have filter, right? This is where you can choose what to actually like include and exclude, right? So for currencies, just press none to be faster. Just select USD. That's it. We'll keep all our event types, okay? And your expected impact, these are up to you. Normally, I would have it like this, just yellow. But if you really want to just be minimalistic, just the red and gray. You're probably thinking, why would I want to have the gray, right? Gray, usually, one major news is bank holiday, and you do not want to be trading on a bank holiday, okay? Because that's just where there's no volume or nothing, okay? But sometimes when you have this deselected, you won't know whether or not there's gonna be a bank holiday, and you might actually trade on those days. So I say keep those on. Orange, yellow is up to you, but I'll probably just keep it like this. And then apply filters and you'll get these. Okay? Um yeah, news. These are the times they're gonna be coming out. I think there's a way to change. Yeah, here you can change your time zone, and yeah, these news are stuff. But later on, I'll go over which news you want to be aware of and don't need to be aware of, I guess. Okay, so Forex Factory. Next, we can go over TradingView. Our main thing, this is where you're going to be at. Just search up TradingView or go tradingview.com. Okay, this is where your charting will be, where basically everybody trades on. And yes, make an account. I already have one, so up here will be a get started thing, right? Um, and then just make your account stuff. This is what you're gonna see after you make your account, right? All you gotta do is go product and super charts. This is just where the main shit happens, okay? This is obviously not what you're gonna see. This is probably what you're gonna see, right? Um, yeah, you can make your own settings. You can just right click settings or double click the candles and just choose whatever settings you want. But I have my own here. I can do a separate video on how that works. Actually, let's do teaching, right? Yeah, I'm feeling this one. I'm doing it dark. No, this I feel like right now. Okay, anyways. Trading view. I would assume you guys can just play around with it and figure it out. I don't think it's that hard to use it. There's settings we're probably gonna be using like on the Fibonacci and stuff like that, but that's stuff I can show you when we do the strategy itself. So the instruments we're gonna be using will be NQ and ES, M and Q and MES. You're probably thinking, what are the difference? Okay, so NQES is NQ is Nasdaq, ES is S&P 500. But what is MNQ and MES? It's same thing, Nasdaq and S&P, but the only difference between these two are the contract sizes. So one contract of NQ, so your regular Nasdaq, is 10 contracts on the M and Q. So M and Q is micro Nasdaq, while the NQ is minis Nasdaqs. Okay, micros is just smaller. So normally, if you have a smaller account size, you will want to be in the micros. If you have a bigger account size, or you're feeling more risky, you'll be on the minis. Okay. Just I guess something to just be out there. If you're on the prop firms, I would suggest using the micros rather than the minis. But if you really want to pass that fast, you should do the minis. The micros should be enough for you to pass pretty quickly, but also you get less risk on those. Okay, let's say your buys was freaking the ass or some shit like that. But yeah. So yeah, NQ or ES. So what else do we go for? Basic charting. Okay, basic charting. So, the market. This is how we're gonna read the market. We're gonna go based on candles. Okay. Candles. Oh shit, this is annoying. Yeah, candles. So hold on, let me make these candles for y'all so it can visually be more appealing. Okay, so candles. Candles are basically the structure of the market, okay? We have okay, so before we get in, we have some terms we want to know. First we have bullish and bearish. Bullish or bearish, opening, closing, opening price, closing price, body, and wick. Okay, so basically bullish and bearish means just up or down. Okay, bull is up, bearish is down. A way to think about this or help you memorize this is bullish. Think of a bull with this horn and like the way it charges, like you like freaking I don't know, freaking slam his head up, right? So bullish means up. Bearish means down. So think of a bear as like claws like this and he's swiping down, kind of like that. Bearish is down. So normally a bullish candle will be green and bearish candle is red. I mean, it depends on what chart colors you have. Okay, so before we go over opening price, closing price, we can go over the body and wick, okay? So a candle consists of the body and wick. The body is the fat part, right? And where it actually has color. And the wick is just this line, like coming out, right? This black line coming out, okay? So the body is basically where you'll find where's your opening and closing price, okay? Opening price is, yeah, I think that literally tells you it is. The price that the candle started off with, like the opening. And the closing price is the price that it closed at. think that's very self-explanatory. Okay. However, it's opposite for bullish and bearish because on your bullish, since we know it's going up, right? Our opening price is down here. Remember, opening and closing price will only be on the bodies, not the wicks, okay? The wick is just price movement. That's it. It's not the actual closing or opening price, okay? So opening price would be down here and closing price would be up here. For the bearish candle, we have our opening up here and closing down here, okay? Since opens up and since bearish went down, it closes at a lower price than up there. Okay, yeah, I think that's very self-explanatory. The wick again is just price movement, or the price was at in this time candle. Yeah, this time candle. Okay, I think that's very self-explanatory. Okay, let's see it in the charts. Here, we have a bearish candle. Okay, I know it's black, but that's bearish and the blue ones are bullish. Okay, that's just my chart colors. Okay, so we know that this is our opening price, this is our closing price. Opening, why is up here? Because it's a bearish candle, so we open higher and we close lower. Wick is just movement in the market. Yeah, I think that's pretty self-explanatory. For a bullish candle right here, we have opening price, closing price. Okay, opening price, closing price, and the wick just movement in price at this time or at this candle. Okay, very self-explanatory. Okay, so we went over candles. Okay, let's go over market structure. Okay, a market doesn't just go down or up, right? You don't have constant movement in price. Okay, that's just not how it works. Okay, it doesn't just go up, move up or down, up and down, or down and up. Okay, there's this thing called market structure. Okay, so it goes up, down, like this, or when it goes up, it goes like this. Okay, basically market structure, we have lows and highs. Okay, for example, this bullish. Try to remember these bullish or these terms. Okay, bullish means up, bearish means down. So this is a bullish market, meaning bullish going up market, right? Bearish means going down market. Okay, yeah, that should be very easy. So these movement called market structure, right? Bro, this shit pissing me off. Okay, basically this consists of highs and lows. So we have a high, 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 low, low, low. Okay, but we have different names. We have a higher high, higher low, higher high, higher low, higher high, higher low. Okay, let's say it's going like this, right? We have a higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, lower high, then lower low. Why? You might be thinking. Because we break structure. This high is now lower than the last high. Rather, in this case, the last high was lower than the current high. So that's why this will be the higher high. But since now our next high is lower than the previous high, now it's a lower high. And because this is a lower low, because this low was lower than the last low. If this low was higher than this low, there would be a higher low. I think that's pretty easy to figure out. Yeah, and then lower high, lower low, lower high, etc. Same thing for this one. We have a lower high, lower low, lower high, lower low, lower high. Let's say it went up like this. Lower high or lower low, but higher high because this one broke or is higher than this high. Then we have a higher low because this is higher than this low. Then higher high, higher low, etc. Yeah, market structure. There you go. Very easy. Okay, I don't know. What else does the beginners learn? Okay, let's go over time, like certain times before we get into the actual strategy. But basically, This is all Eastern time, guys, by the way. Not LA time, no freaking bullshit like that. Just Eastern time, New York Exchange time, okay? 9:30 a.m., right, is market open, okay? Remember, when market open is the most volume, okay? Volume meaning orders, trade orders, like can be long, shorts, buy stops, limits, and everything you can think of. Stop losses, profit, take profits. That's when they just shoot in, okay, into the market. That's what's volume, okay? It's just orders, okay? And liquidity also counts as orders, also. So let's go over liquidity. Remember how we learned about market structure, right? Liquidity is normally sitting on swing highs and swing lows. So we have a high here, lower high, higher high, lower high. Yeah. These highs and lows all have liquidity, okay? Liquidity means orders sitting here. So there could be a stop loss being here, a buy limit, sell stop, just sitting here that's unfilled, okay? Unfilled meaning it's not live in the market yet. It's just sitting there until price hits it, okay? But there will be areas where, yeah, there will be areas where these orders are not filled, which actually getting ahead of myself on that. But yeah, liquidity is at swing highs and swing lows, okay? Especially if there's what we say higher time frame, um, higher time frame liquidity mean at the higher time frame highs and lows, because those are stronger liquidity levels. Okay. All right. Let's go over confluences before we get into few things before we get into the actual strategy. First thing I for some reason I didn't even know about is gaps. Okay. Right. These gaps where there's literally no candle at, these are very strong liquidity levels. Okay, these are like market will definitely retrace back to these prices. Definitely. Okay, you can easily get a really nice trade off of these. Like for example, we have another one right here. Right, market always goes to fill it. Okay, because these are just places where orders are not filled yet. Right, it's just a sudden displacement going up. The market always ends up going to these areas, so these are important parts you should take a look at. Or it could be a really big thing you can change in your bias, okay? Or draw of liquidity. Yeah. Draws of liquidity, by the way, is liquidity levels that price want could head to and want to take out, like want to like pass through, okay? To fill those orders. Okay, so now we have. Okay, so back to the liquidity, right? Notice how I say there's highs and lows, right? Liquidity could also be sitting at Asia highs, London lows, or no, Asia highs and lows, London highs and lows, previous days highs and lows, midnight open. There's so much liquidity you could think of, okay? Usually for Asian London session, like highs and lows, I have an indicator which I will share later on that I made with chat GPT, which you guys could also do yourself. And also previous days, highs and lows, you can just go on the day and then just go boop, boop, or boop and boop. That's your previous days and lows. Yeah, I think that's pretty much that. Higher time frame liquidity is also very strong. Okay, also another really strong liquidity level is equal highs and lows, especially relative, like high, relatively equal highs and lows. Like these are such strong liquidity levels that if these get sweep, there's very high percentage that they're gonna reverse. Market's gonna reverse, or if there is a unfilled liquidity level, there's a very high chance the market is gonna head that way. So there could be a trade you can be looking for that goes to that way. So it's like it's helping you with your bias. Now, let's go over fair value gaps, the big boys, okay? Fair value gaps consist of three candles. Three candles. We got our starting candle, middle candle, and our high, or yeah, the other candle, I guess you could say, or the end candle. So basically, there will be gaps there. You see these wick, right? Remember how these are like where the prices were at, right? But since these wick has not gone to these areas, we have a fair value gap. It's like a gap between. For example, we have this one right here. Gap, because the wick didn't fill all of this. Let's say the wick went all the way down to here. Then there would be just no gap. So there's no liquidity. All the orders got filled already. Okay? Another way to find fair value gap. We have another one right here. This one here. We have nothing. No wick clearing out all of this. That's a fair value gap right there. Let's find another one. This one right here. Really small one, but that still counts as a fair value gap. Notice these are prices where market wants to, like, I don't know, react off of. For example, see this one, fair value gap right here. Market reacts and freaking shoots down, right? That's a pretty important level, right? We have another fair value gap right here. Reacts and went down. Didn't really continue going down, but yeah, there's that. There could be very small ones right here. We have a really, really tiny small one right there. I mean, got completely destroyed, but yeah, these are fair value gaps. There's bullish fair value gaps and bearish fair value gaps. There's a difference between them, okay? And yeah, fair value gaps. Fair value gaps is just setting orders that are unfilled. And yeah, if there's a wick like that fills it up, there's no fair value gap. It's not valid at all. So yeah, fair value gaps. We could go over order blocks and rejection blocks. But no, I don't think we really need to. Okay. So yeah. What else we got? Oh, trading strategy. Okay. So the strategy we're going to go over is the MEC model. Okay, MEC model is basically a model that can be done in any bias, short or like bullish bias or bearish bias. Okay, so the MEC model is basically accumulation, manipulation, distribution, right? But the difference from this MEC model and the PDI model from my last video is that your liquidity levels are very different. For example, normally, actually no. PDI model is more of just like you look and see where accumulation happens and manipulation happens and then just hope for the best. But the MEC model is like you actually have to sweep some type of liquidity to have a valid like setup, like an actual confirmation setup. So first, it's like an extra confluence that will definitely help you have a higher success rate on your trades. But it happens less because there's more criteria you gotta fill. So basically, accumulation, manipulation, distribution. Accumulation, manipulation, distribution, right? But MEC model has to sweep some type of liquidity. Higher time frame unfilled fair value gaps. So remember, unfilled fair value gaps are literally the best, especially higher time frame ones, like 1 hour ones, 4 hour ones, maybe 30-minute ones, but 15-minute ones are not that great, but preferably the 1 hour or the 4 hours, okay, unfilled fair value gaps, because those are very high liquidity levels. You can sweep higher time frame fair value gaps that are unfilled. Remember, unfilled. Or Asia highs, lows, London highs, lows, previous days highs and lows, and yeah. That's the first one. Okay. you have to sweep for even this thing to start, right? For this model to even show up, you gotta first find your accumulation, so where price consolidates. So consolidate means like the market just moves sideways in a certain range, right? And make sure when it actually manipulates and sweeps some type of liquidity, right? Then on the manipulation starting become distribution, there's got to be an inverse fair value gap. So inverse fair value gap is, okay, so this is your regular fair value gap, okay? Think about it like this. In fair value gap it's like when you respect it and you decide to keep going. But an inverse fair value gap is like this, where you start coming down. What the fuck? You start coming down and you just disrespected it and then went down and like that. That's how you know it's an inverse, because you didn't like respect the fair value gap. You didn't see a reaction off of it. That's what an inverse is, fair value gap. And you enter either on the instant, depending how clean the inverse is, you enter off of the inverse or the bounce going down inverse in target for internal liquidity or external liquidity. So internal liquidity is basically the range, I guess you could say the accumulation range, high or low, depending on which model you get. So like for example, if I would enter it off of here, stop loss will be at the manipulation leg swing low or swing high, and your first take profit will be the most recent high or low. Yeah, not the manipulation leg high low, but the previous highs and lows that are unfilled or not swept yet. And then you can take partials here or take full profit, up to you. And then just, okay, let's say you took partial, right? If it hits here, you took partial, you probably go break even and then just trail your stop loss until you get stopped out and make some extra Benjamins. Okay, for the bearish view, okay, we got accumulation, right? We gotta sweep a higher time frame liquidity, maybe 1 hour, 4 hour fair value gap, I don't know, Asia highs, low, London highs, lows. Sweep that. You have a fair value gap here, inverse that, and then enter off of that. Stop loss at the high, just keeps going down. And you take profit internal liquidity, so like around here, and then continue down. Yeah, that's that. Let me show you a possible example of this. Let's go. Today is what? Monday? Let's go Friday. On Friday. So, where's Friday? Friday's open. Friday 9:30 open. Okay. Okay, let's pretend we didn't see any of this. Okay. Let's go to the 4 hour actually. Yeah. So this candle's not even made. So this is what we're seeing. First, you mark up your. Actually, no. Actually, we gotta go through bias first. You gotta find a bias of the day, right? Bias is like what you're painting a story to predict where the market is gonna go. That's basically what it is, okay? And so first you gotta see what confluences that the market rejects it off or respect. So on the 4 hour, it looks like we respected this bearish fair value gap. See, it wicks and just keeps going down. But it's possible we could be going back up. Oh shit. Yeah, there. So yeah, this is when it goes up. So but okay, for example here, we respected it at first, and then we inversed it, and we respected bullish fair value gaps. So we're bullish on the 1 hour, but on the 4 hour we are bearish, I think, right? Yeah, 4 hour we are bearish. So we have like opposite biases, but it also depends on draw liquidity, okay? So now we know our bias, right? Yeah, now we know our bias. We have to do markup liquidity levels and yeah, that stuff. So we have this high, this low. We have this is already filled. It is also filled already. Let's go to the 1 hour. Anything unfilled? Okay, we have an unfilled 1 hour bearish fair value gap. We have also another unfilled one. Actually, no, that's filled already. Yeah, that's only the thing I can see. Okay, so for Asia highs and lows, okay, guys. Best way to do is 30 minutes, right? These are the like using the line, this line thing, right? These are the times you want to mark. You can see the times down here, okay? First, 9:30, so that's your open, right? 3 a.m. and 1800. I think 1800 is 6 p.m. I'm not sure. Yeah, 6 p.m. These are your, so this is Asia, this is London, and all of this, anything after this is New York, okay? So you can put your highs, like, no, that doesn't count. We have a high here. We have the lowest of Asia lows, okay? We have a high here, the lows here. Normally, I remove the ones that get swept. For example, we have this Asia liquidity. London decides to sweep it, and adios, that goes. So we just have these levels. This, I guess you could say that this. Yeah, we just keep that because that's the only one I see that gets swept. So we can remove these, right? We're on the 1 hour. We can look for more highs. We have more highs here. We have a high there. We have a high over here. We have, yeah, if I got so far. So yeah, where's 9:30? Forgot. 9:30. Not 30. Okay, so now that you marked all of that and you got your bias, right? You want to find your accumulation manipulation zones, right? So market open, shoot down, right? Bam, right? But you don't want to trade at least 5 to 15 minutes before market opens because we have this thing called macros / kill zones, okay? Macros and kill zones are times from ICT where volume starts kicking in and also like the time where most like small news come out because news equals liquidity. That's what it is, okay? So for us, the macro be 950 to 1010, I think. I think 1010, yeah. This is the macro. So normally you want to enter a trade from 950 to 1010, which is the most optimal, okay? So first, we sweep these lows, which is boom, adios, right? Then just move, okay? We have our first accumulation right here. Accumulation and manipulation right there, right? And how do you know it's a manipulation or a good one? We create fair value gaps, right? You got fair value gaps down here, right? We have this one, bearish, fair value gap, and bullish fair. You know what? This is annoying. I can't really see it. Yeah. Wait, no. This also looks weird. Yeah, that's bit. Wait. I don't really care actually. Yeah. We have these two fair value gaps. As you can see, we inverse this like instantly. How do we know this is a good entry? One, we sweep liquidity. We sweeped what did we sweep? We sweeped, I think, just a high, I think. No, we sweep this. I'm assuming this is London lows. Yeah, London lows, right? Where is, yeah, London lows. We sweep it, right? And we produce this inverse fair value gap, so this is already a really good trade. Put on the low and target internal liquidity, which is this, right? And then let's say you took a partial because you're so freaking confident in this trade, you go for the next liquidity that's not been swept. This has been swept already, I just realized. So you could go for either this one or this one. I'll probably go with this one and take full profit there because I'm not a greedy motherfucker like you guys are. Okay, so yeah, that's what a great trade that is, right? So remember, it's accumulate. I'll go through examples on my next video, just going through every single example from every single day, okay? But this is just like your first example. This is actually a perfect trade. Like, this is such a nice trade. Damn. And it was just 16 minutes and you could have made freaking bank. So yeah, accumulation, manipulation, distribution. Manipulation, how do you know? It creates fair value gaps. What do you have to do in the manipulation? You have to sweep some sort of liquidity. What liquidities can you sweep? Higher time frame fair value gaps, liquidity levels like Asian highs and lows, London highs and lows, or just previous days highs and lows, and etc. Yeah, strategy. Examples will be on my next vid. I don't want to go through a bunch of examples. Psychology should be short. Feel like this is something you should build upon yourself. Trading, not get rich quick. It's a skill you must learn that takes time and effort and practice. You must build every single day. Maybe not every single day, because you guys probably have busy lives and stuff like that. But if you have the time, practice, practice, practice. Stick to one strategy, okay, and get good at it, and then use that to build more, okay? Because don't keep hopping strategies. That's just bullshit, you know? You gotta just stick to one and then get hella good at it, and then you can start making money. Psychology, don't have FOMO. Don't fear missing out. This strategies in general is just basically rules that you must follow to that could lead you to enter a trade. If you decide to enter a trade that doesn't have a certain like step that or confluence that got confirmed in the strategy, you're basically breaking your own rules. Why would you want to break your own rules? These rules in trading strategy are set for you to be successful. So why would you want to break it, right? Think about it. Okay, trading strategy, you must, even though it looks like a good trade, based on my experience, I lost so much money just because I missed one single confluence and thought that this was a good trade. In reality, it wasn't. Okay, don't have FOMO, fear of missing out. Also, yeah, psychology, must follow your rules, stick to one strategy. It might be take long. For me, it took me 3 years to get good at this, right? But maybe for some of you guys, it's faster and stuff like that. So yeah, um, gotta put the work in. Yeah, I think that's pretty much it. This is psychology. You're gonna have shitty psychology when you start off. You're gonna have fear of missing out. You're gonna freaking enter trades, whatever, and you will break your own rules. But this is something you have to build upon, and you will learn through patterns, and you'll learn throughout time. That's how it works. Okay, it's not like as soon as you see this video, you're gonna be freaking the psychological master of the market, because the market is built on our economy. It's not supposed to adjust to you. You're supposed to adjust to the market. The market don't care about you. Okay? All right. So, prop firms. This is where we get to the actual how to make your freaking Benjamins, right? So, prop firms. Let's say you're broke. You got no money, right? Was like me, right? Prop firms allow you to basically, it's like you take a test which is trading, and you have hit a certain profit target. And after you hit that profit target, you probably get like an account where you actually can get real payouts, like real money payouts. Like, yeah, that's basically what prop firms are. They're just businesses that allow you, basically kind of lend you money. It's not like a loan. It's just like an account. After you pass that test, you can actually get payouts. Okay. So what prop firms are we talking about? Bam. There's many prop firms. Some are scams, some are good. But these are the top players that I know and I have traded from. Okay. So first we have the big two. Okay. Top Step, right? Top Step. Apex. Actually, I'll just go through every single one first. Okay, and I'll rank them through. So we have Top Step, Apex, My Fund of Futures, Alpha Futures, Tradeify, and Take Profit Trader. I think there's more, but those are the ones that I have not tried yet. Okay, I had the most experience with Top Step and Apex and My Fund of Futures. And yeah. Okay, so normally you have the main account you get is like the 50K account. I think all of them have 50K's account. They all have different pricing. Some have no activation fee, some do have activation fee. Some might be more expensive than others, some might not. Some have more stricter rules, some other has less stricter rules. Some has, I don't know, certain payout rules. Others might not have those payout rules, and yeah. But the big players are Apex and Top Step. Okay? How these work, they have a profit target, right? You have a maximum position size, maximum loss, and yeah. Well, actually, let's go standard. And yeah. Wait, I think there's no activation fees. A new thing for Top Step. I have not. Oh yeah, new. Shit, I'm stupid. So yeah, but normally it's the standard. Okay, so 49 a month and the activation fee when you pass the. Okay, for Top Step, it's called the combine, but it's just the test. Okay, so first profit target is obviously the profit you want to hit to even pass that test. Maximum position size is 5 contracts. Okay, so how this works is 5 contracts for minis, but that also means, remember how micros and minis work, right? 5 contracts on minis, but on micros, 50 contracts, because remember, 1 contract on the mini is 10 contracts on the micros. Just remember that. So let's say we're in 100, right? 10 contract means you can do 100 contracts on the micros. Okay. So maximum loss limit is, I think you know what that is. It's just the max loss you're allowed to get. So as soon as you in the 50K account you hit 48K, you bomb that account. On the 100K, I think it's like 97,000. That's when you're done, and stuff. Yeah, and it keeps going. Okay. Um, what else? Okay, so especially Apex. Okay, Apex has basically the same stuff. I think you can hear profit target, contract, how many contracts you're allowed to do, and stuff like that. But the drawdown is different. Okay, Top Step has just a solid drawdown. So the drawdown is like where your how the your loss limit moves. Okay, so the drawdown on Top Step updates every single time the market closes, so it's a daily thing. So whatever you end at the end of the day is what happens to the drawdown. Okay, but on Apex, however, it has a trailing drawdown, which is whenever you trade, you enter that trade. Let's say you're in profits, your trailing drawdown will follow it. Okay, but let's say your trade didn't go too well. You went up and went back down a little bit, right? Your drawdown is not gonna go back down. It's gonna stay up there. Okay, so that means you're gonna be much more closer to your drawdown than you think. That's the big thing that on Apex a lot of traders end up bombing their accounts. It's because of that trailing drawdown. So on Apex, you technically want to take profit ASAP. That's usually the thing. So yeah, make sure when you look for these prop firms, make sure you check what type of drawdown they have. Trailing drawdown or just like a flat drawdown. Okay. So as for pricing, I think Alpha Trader is the most expensive. Um, and Apex is the least expensive because Apex often have these discounts, like 90% discounts, 80% discounts. So you can get like a 50K account for $20. That's pretty good. But the activation fee, I don't know if that changes too. But Apex has a lot of discounts and it happens often, okay? Alpha is just straight up the most expensive. But like TJR, I think TJR is one of the big affiliates of Alpha Futures. Just know I'm not affiliated with any of them. Well, obviously I'm not, but yeah. Top Step, Apex, My Fund of Futures, Alpha, um, uh, what is this? Tradeify, right? And Take Profit. Now, let's say you're in a certain scenario. I would suggest what platforms to do. Let's say you're already pretty, you know how to trade and stuff like that, and you already got your strategy down. You've been pretty consistent, and you want to scale. Apex is the way to go. One, obviously your discount, but Apex allows you to copy trade 20 freaking accounts. Okay, 20 accounts. So basically, it's like, let's say you will make 2,000 in one account, like a 50K account, right? Wait, hold on. Let's do this math. Let's say you make 2,000 in one 50K account, right? But let's say you end up buying 20 50K's account and copy trade them. To make 2,000, all you got to do is make 100 per account because it copies off of all accounts. That's the really big thing that's really good about Apex is that you can copy trade a lot of accounts, okay? I think Topstep has 5 accounts you can do, and I'm not sure about these. But yeah, copy trading. Pretty good thing to have. Top Step is really good for beginners, right? Because there's no trailing drawdown, right? Apex is good for if you're experienced and you want to scale. My Fund of Future is pretty good. Like it's just like your mid ground. Alpha is like you're actually experienced. Tradeify is mid ground, and Take Profit Trader is, I guess you could say, mid ground to advanced because they're the one good thing about Take Profit Trader is that they have same day payouts. So like on that day you can pay out, which is crazy. I think that's broken if you actually get the account. So yeah. Oh, also all of these have different payout um, rules. Like some of them be like you can only pay out like bi-weekly or weekly or monthly or, and also they have like a payout cap. So like you can max pay out 5K or I don't know, something like that. I think I got funded from Top Step. Yeah, I got funded by Top Step by freaking bomb of. I think I passed one for Apex. My Fund of Futures, I tried one and I actually passed it, but I just bombed the actual given account. Alpha, I'm looking into trying this and Tradeify, and yeah, those are kind of just there. So yeah, okay. So how do you scale, right? So let's say you pick Topset or Apex or any of the prop firms, right? And you got a funded account, right? The first step to scaling is obviously to start copy trading, meaning getting more accounts, right? But let's say you maxed out on the accounts, right? You can put that account, put the funds you get, the payouts from those accounts, and put in an actual live account, right? Because the rule of thumb for money is that you make more money the more the money moves around, okay? That's the rule of thumb, okay? So it doesn't have to be trading. Like, let's say you decide to start a business, something that's a good way to invest in yourself. There's also long term stocks you could do or indices that you can start adding money in for long term wealth. You scale more, obviously. Put it in an actual live account with an actual brokerage. So, like Trade Evade, AMP, or all the stuff here. Let me show you. Just whatever here. These are I mean, there's more, but you might want to search that up on your own. So yeah, that's that part. That's how you scale your money. There'd be for the trading strategy. I put more examples and stuff. I'm just really tired of talking about this over and over again. So yeah, I'm planning on doing on Top Step. Uh, okay, yeah, I'm planning to do a five evals on evaluations, which is the test on Top Steps or combines. Five accounts and see where that goes. Cause I kind of closed my other accounts, and I just have a live account on AMP futures, and let's just say I've not been doing too well on that. I've been losing money on it, so I'm gonna need some sort of side passive income, or not passive income but side income. So yeah, the reality of trading is that it's inconsistent income. um and yeah, I think that's pretty much it for now. Examples will be on the other videos that I make, or the future video, and I'll be more in depth, like an actual like what to look out for and stuff like that. And yeah, if you made it this far, I'm starting a clothing brand called Unmarked, right? We already dropped in Europe and we sold out already, and we're gonna do an Asia drop, and then our last one will be a US drop. But let's say you made it down this far, text me on Insta, and on your first purchase, right? Or yeah, on your first purchase, you get like 50% off plus free shipping. I mean, they're all free shipping, but you get 50% off. I see that's a pretty good deal. So yeah, there you go. I think that's pretty much it. Yeah. All right. Bye.